Hello, everyone. Welcome to the EY India podcast. My name is Vivek Soni, and I'm a partner in EY's investment banking team. And I'm here with a very prominent guest, Mr. Ranganath, Chairman, Catamaran Ventures. Mr. Ranganath has had almost 3 decades of work experience with IT giants like Infosys, financial services giants like HDFC Bank, and now, since the last many years, he's been spearheading Catamaran Ventures. Welcome, Ranga. It's a pleasure to have you here.
Thank you very much, Vivek. A pleasure to be here.
Thanks.
I think, I have also a very long association with Ernst & Young in my earlier different parts of the career. It is always a great association and wonderful to be here.
Great. So, Ranga, let me kick off with, the question that sort of spans into your early years at Infosys and, the art of leadership. How has this long stint in such a well-regarded, well-reputed corporate like Infosys transformed you as a leader?
Well, I think that's a great question. I joined Infosys as a business analyst in what used to be called as a domain consulting group, which essentially was a group of domain experts who would go into projects, prepare specifications for the technical team to write. And I think something unique about Infosys was the growth story. And also, when we joined the company, there was a sense of pride in all of us. Look, we are part of something big and very, very passionate leadership, all the founders, and very high value system based. The reason I joined Infosys was also that it gave me a global opportunity, global perspective, because earlier I used to work for ICICI Bank, then I switched primarily because it gave an opportunity to work on global projects, get global perspective, work in different continents, different industries. And that was also a boom time for IT services, right? We used to grow 50%, 100% every year. And that journey, one led to another. And thanks to a very kind of the leadership development program that Infosys has, all of us got trained and our trajectory led one to another, culminating in the role of Chief Financial Officer. Before Chief Financial Officer, I was also Chief Risk Officer of Infosys. It was a fantastic journey. I think what it taught all of us, like me, thousands of Infosians, is ability to think big, ability to scale, and also manage, kind of hone our different skill sets, right? Not just technology, not just finance, not just marketing. It gave us opportunity to grow as leaders and individuals with a kind of a bouquet of skill sets. So that was something very unique about Infosys.
So, well-rounded experience, exposure to many different industries because of the deep foray, thanks to Infosys, you made on the IT services side, culminating in an investment vehicle which is quite famous, Catamaran Ventures. Can you help our listeners understand a bit more about Catamaran, its strategies, where does it invest in India, globally? That'll be really helpful.
Sure. Catamaran is actually what we call as is a global investment firm, which happens to have one investor, which is Mr. Murthy's family. I think from day one, Mr. Murthy and family was very clear. It has to be very professionally run by professionals with a lot of independence in decision making. In fact, the only thing that we discuss with the family is we take a sign off on expected return and the risk appetite. Beyond that, all the investment decisions, asset allocation, how much to public, private, and so on, it's decided by the professionals within a Catamaran. And we have an investment committee and the team of investment experts. We decide. I think it is a good model of providing complete independence decision making. But what is something that the family provides us? Certainly the brand equity, as well as the core values that Mr. Murthy and family have kind of sustained over decades, whether it is Infosys values, family values, kind of that is really the bedrock of Catamaran. Beyond that, I think we have evolved over last decade or so. I think initially we used to take direct bets in early stage companies, and over a period of time, as you know, that kind of we also started investing in early stage funds, and when those companies come to growth stage, we co-invest. And we have a spectrum, and what we call is as a patient capital, which stays with the founders right from inception all the way till IPO. Now, we have talked about two examples already in our other conversation. Apart from that, we also kind of made a pivot about 3 years ago into precision manufacturing. We do believe, I think Mr. Murthy's kind of vision is also that, look, if we invest only in services, e-commerce, those kind of stuff, we'll be probably creating jobs, certainly yes, but if you have to create jobs in manufacturing, in the hinterland of India, in globally competitive manufacturing companies, we have to kind of invest in certain part of manufacturing. As you know, today, India's GDP from manufacturing is only about 15%. And if India's aspiration to grow and to become one of the top 3 economies, manufacturing has to lead that growth, for which the GDP share from manufacturing has to be mid-20s. Then we looked at the entire manufacturing spectrum. As you know, it's very wide. We chose precision manufacturing precisely because that was also around the time when a lot of global manufacturers started shifting some part of their production away from China, some part. And we said, looks a great opportunity. If they shift, their ecosystem also have to shift. Their vendors have to shift. So we spotted an opportunity in identifying those vendors. But we're very clear, wherever we invest in precision manufacturing, those companies have to be globally competitive. They have to supply to global players as well as in India. So that has played out well. 2 of those companies have went public recently. I think that's something. The second aspect which is unique to Catamaran is our joint ventures. As you know, we brought Amazon to India. We had that Cloudtail. Similarly, Aeon, we had an insurance brokerage. So we continuously look for JV opportunities, precision manufacturing, e-commerce and services. So what do we bring to the table? One, there is an enormous brand equity here, which helps us in navigating the local regulatory and other aspects. And second is we understand technology and scaling, right? Thanks to our earlier experience, the scaling, how do we grow 100%, 200% every day? Scaling is not just about revenue. How do we kind of scale the processes, whether it is hiring process, whether it is compliance, whether it is sales. The scaling is one of the unique value we bring to the table. And now, of course, having invested in precision manufacturing, that's another expertise we bring.
Excellent. What about, what sectors do you like besides precision manufacturing when it comes to direct growth investments? And if you can also elaborate a bit on, your investments in funds.
Right. I think on the first part of your question, clearly precision manufacturing is one. And we are also kind of focused on certain technology-led investment. E-commerce was one example. As you know, we have invested in certain insurance companies, which are digital insurance companies. We have also kind of increasingly looking at companies, made in India for global markets, right? It could be in deep tech, it could be in some kind of a services as well. So that's another focus. I think one of the pieces that we always look at is, what is the scaling possibility? What is the pathway to scale for this company or for that sector? That's really important for us. And we do believe that from our past experience of building scalable global companies, and something unique thing about Infosys from day one was it kind of ensured that it was always globally competitive, not only for local markets. So I think that philosophy is deeply ingrained in our investment choices.
All right. So just fleshing this a bit out, because the range of investments that Catamaran makes, you do early stage bets, now you're doing a lot of growth, you've also invested in listed companies. When you look at your own asset allocation in terms of at what stage of the evolution of a business do you want to get in, how do you construct this portfolio in your mind between listed, unlisted, how much to put where, what is preferred? Any thoughts you can share on that?
No, I think primarily it is driven by what is the expected return of the overall portfolio.
Okay.
Right? That's the discussion that we have with our principal investors. Say, hey, I think we have already publicly stated this. Our objective is that we have to double our assets every 5 years, which essentially means that we have to grow. We have to compound at least at 15% per annum.
Yeah.
Now, to generate that, the second criteria we also have is that you have to have a fair amount of liquidity in overall portfolio.
Yeah.
Liquidity is equally important for us. So, of course, we have to kind of balance between these two. We have certain expectations on liquidity, and the 15% that I mentioned. Using this, then we start allocating how much to public equity overall, private equity. Then within private equity, growth and late stage and early stage. Our thing is we have got an optimal mix which serves these two investment objectives. For example, as I said earlier, in the early part in private, we were very skewed towards early stage debt investments. By definition, it is not that liquid. If you look at now, when we do growth and pre-IPO, 36 months before, they're by definition more liquid. Two of our investments have gone public in the last 5 months. So that's one characteristic. Coming to public markets, we do a mix of both index as well as the direct investments. Yeah. Index, at the peak of COVID, we kind of took a bet on NASDAQ index, in the sense that, as you know, in India, there is a provision for us to invest through mutual funds. You invest in rupee, gets converted into dollar, goes into NASDAQ, and if you want to sell, it comes back dollar to rupee and back to us. Yeah. So which gave us that window we used, and similarly through Gift City, we have certain opportunity to invest. So primarily, a large part is index, significant part. And we said, look, at the same time, our team has to understand what's happening in each sector at the trench level, which means we created what we call as an opportunistic portfolio, which is stock specific. And our team kind of actively manages that. So we use these. And also, of course, and the fixed income, we evaluate. So far, plain vanilla, but there are opportunities that is coming up in private credit, for example. Right. And these are some of the asset allocation principles that we have.
Understood. That's helpful. Now, the next question is about a matter which I know is close to your heart, which is governance. Coming from the entire background of how Infosys constructed itself as a company, its sharp focus on governance. When you look at deals, when you look at backing founders, or when you look at investing in companies, this invisible metric of governance quality, how do you diligence that? How important a role does it play in your decision making that you want to back this business or that founder? If you can tell us a bit about that.
No, I think two aspects of questions are very, very sharp and important for us. First of all, for us, more than anything else, beyond the business plan, beyond the promoters, whatever, the underlying value system of the founders and the key management people are extremely important. I think we take time to assess that, and it is also very difficult to assess, right? I mean, there is no easy way of assessing. In the growth stage, it's probably easier. You know what they have done in the early stage, what has been the trajectory, what has been some of the publicly available use of private news. But in a very early stage company, it's extremely difficult to assess. And we have certain mechanisms. We take more time. in understanding what is important for the founders. And if they talk only about valuation and not about values, we'll be disappointed. I think we want a kind of a lot of emphasis on values. And many times our assumptions have gone right, most of the times. There are instances where assumptions have gone wrong, and we have learned from those mistakes. But I think another invisible metric, I like that term which you use, another invisible metric that we use is really the resilience. Resilience to kind of, stick to the business, not what is the target segment, what is the business value proposition that they have. Keep on sharpening and be focused. Come what may, keep on, in a kind of consistent, stubborn way, work on it is extremely important. But I think beyond that, one of the things you mentioned, governance, we do believe that we bring that expertise to table. For example, if you look at Infosys or even HDFC Bank and so on, in their formative years, these governance principles were put in place. And it is now, of course, very famous when all the Infosys founders met, and Mr. Murthy has said this several times. They decided that globally respected corporation was their vision, not the most profitable, largest in market cap. I think from inception, how does one generate that enormous focus on governance? It's not in lip service. How do they create process? How do we demonstrate in actions when somebody deviates from governance? I think that has to start from early stage. And somehow, some of the promoters we meet, they say, okay, governance is a bureaucracy. Let me first grow. Let me worry about governance later. But I think our experience says that unless these seeds of governance focus are not sown in early stage, very unlikely that happen in the later stage. I think in all the companies that we work, we help them in creating that sustainable governance processes inside the company. And that is one reason also that several people want us on the cap table. So that gives some amount of stamp of approval on the governance in the company.
No, clearly the halo effect is there of Catamaran being on the cap table. And I guess to all the founders out there, it makes a lot more financial sense too, right?
Yeah.
A better business will always get a better multiple.
Premium.
And to be a better business, you got to have your governance right. So moving on to the next question, which I'm sure going to be of tremendous interest to all our listeners, is tell us a bit more about the investments that Catamaran has made outside India, and what is the lens you use when you are evaluating and finally doing those investments.
We have the global portfolio is managed by a person based in US, but I think the focus there are principles are very similar in the sense that what is the target return and liquidity that the principals want there. But there again, I think in the US, unlike India, we do not have so much of company level, right? There are thousands of companies listed there. So we said, look, till we get that company specific, I'm talking about the public markets, company specific level research potential, we will invest in index. So that has played out very well for us over the last 7-8 years since we have been investing in index. But coming to the private equity, I think there again, one of the focus areas in choosing the funds for us has been the DPI, right? Yeah. I think IRR is good, extremely important, but I think over a period of time, we have learned that, look, DPI kind of history of a particular fund or a group of funds is extremely important. You very well know more than me that the median return in private equity is below the listed index, for example, NASDAQ. And there has to be liquidity premium for a fund. Yeah. Because NASDAQ, 14-15% instant liquidity, and somebody has to deliver much above.
Makes
for,
sense, yeah.
for that liquidity premium. So we have invested some both in early stage, growth stage funds. We have invested in tech, of course, obviously, as well as in biotech. We have invested. We've also invested in certain digital commerce companies in the US. But I think there we also get opportunities to co-invest from the funds that we invest in. And that has worked well.
Okay, moving on to from work to helping us understand Ranga the person. What are your passions outside of work? And how do you like to spend your time when you're not working?
Right. I grew up in a small town, right, which is about 250 kilometers from Bangalore. My early schooling was there. The good thing about small town is that everybody knows everybody, and the sense of camaraderie is very high. And small town people also tend to develop some amount of toughness and resilience part, and also a sense of confidence in tackling the big city issues. I think that honed up clearly the resilience part. Now, of course, that took me to, I graduated from University of Mysore and then I went to IIT Madras, then took a lot of twists and turns. But I think, coming back to your question, I'm an avid movie watcher, both Bollywood as well as Hollywood. I don't have any specific themes. And I think one thing I'm very passionate about is really how to create financial independence for women, right? I think that's something that's very close to my heart. Not necessarily only in villages, but also in cities. That's one of the reasons I joined the board of Women's World Banking in New York. They work in 50 countries, only with one singular objective. How do we increase the financial independence? It can lead to financial literacy, it can lead to many other aspects, but that's one thing which is I'm very focused on. So movies and this.
Excellent. Any sports you play?
Sports I watch.
Yeah.
Of course, how can anybody miss cricket?
Oh, yeah.
Yes, cricket, I think I very closely watch. Apart from that, I think thanks to my son, I also picked up football as one of the things to watch. So these are the hobbies.
We've had this very exciting week where we've seen cricket and deals go hand in hand.
Yes, I know.
Your home city team has changed hands.
I'm so happy. I saw the valuations. Fantastic. I think it's a great deal. And I'm sure that will provide some big push to Royal Challengers.
Yeah. So, to sort of pull it all together before we end this, what would be your advice to all the startup founders who are watching this on the new generation of entrepreneurs? There are a lot of professionals who are thinking of moving on to the other side and starting their own venture. Private equity and venture capital, thanks to backing of investors such as Catamaran, has, I would say, democratized entrepreneurship in India, right? For the right idea, for the right founder, capital is not such a constraint as it used to be before. So as people go about starting on this journey, what advice would you give them on the three things they should never forget? Let's just say, let's keep it simple.
I think first thing I would say of the three things is really keep the idea simple, right? Ability to communicate what that business idea, not just for the fund, but also to themselves as to their team. What is that kind of business value that they are, unique business value they're adding either to a customer, individual customer or to a corporate? It has to be simple and should be easily explainable. I think if one has to explain the second time, if the listener doesn't get the first time, I think they've lost their attention. And the second one is really, don't be over focused on valuation from day one. I've seen many pitches. In first pitch itself, they say, look, this is the valuation I'm expecting. I think valuation is really a derivative. It cannot be the starting point of conversation. And third one, clearly, I would say that, whatever they want to do, I think from Catamaran, we say, look, are they globally competitive? Are they competitive because of some government, controlling that sector? Are they competitive only in India? Are they competitive because custom duty is high? Are they competitive because of some other restrictions? I think finally, if somebody is globally competitive in terms of both the product or service, finally they'll be winners. They may start in India, go out, or go out in multiple geographies. But I think from day one, how could they kind of aspire to be, whether their product and service is globally competitive, both in terms of the business value it creates and also, of course, the price.
Got it. So there you have it, folks. Pearls of wisdom from Ranga. Thank you so much for joining us. Thank you so much for joining us, Ranga. It's been a pleasure having you on board the EY India podcast.
Thanks a lot, Vivek. Great chatting with you, and look forward to be in touch and see how we could collaborate in creating this wonderful opportunity in India.
For sure. Look forward to it.
Thank you.
Thank you.